Welcome to the VC React podcast. Every week, we bring you insights and reactions from top VCs reacting to weekly news on startups, VC funds, and investment rounds. In today's episode, we will dive into the exciting surge in MENA startup investments. In July alone, we will uncover what's fueling this wave, why Egypt is leading the charge on this, and why Fintech continues to dominate while Web3 makes a surprising gains. We will also talk about MealPlanet's impressive $6 million seed round, just 8 months after launch. And finally, we will explore the roller coaster journey of Magic Leap, a company that's still pulling in massive investments despite the turbulent path. We have a great episode for you today with 3 brilliant and accomplished VCs: Amal Dokhan, managing partner at 500 Global; Ahmad Masri, partner at Silicon Badia; and Issa Aghabi, founder and managing director at Access Bridge Ventures. In the video description, you can find more details on our guests, their LinkedIn profiles, and links to their companies' websites. Our weekly news are brought to you by FWDstart, MENA's top news aggregator that sends you MENA startup and VC news twice a week. And as always, from FWDstart, we have my co-host, Jamie. What's happening this week, Jamie?
Yeah, good morning, Ahmad. I suppose the best place to start is to reflect on the previous month. I know we're midway through August now at this point, but nonetheless, I think it's a good opportunity to take stock. So look, I won't dwell too long. I think it'd be good to kind of collectively go through this together and highlight some of the main talking points that we want to discuss. But I guess headline: investments rebound, which is good. So we're looking at in July 2024, $355 million was raised by 38 startups. So that's a 206% rise month on month and a more than 260% increase year on year. I guess a large bulwark of that was made up by M&T Hallen's quite large $157.5 million funding round. But I guess some of the more interesting, and you alluded to it there, Ahmed, already, would be the resurgence of Egyptian startups raising over 185 million over 7 deals. I mentioned obviously M&T Hallen makes up quite a considerable part of that. We look forward to maybe hearing Ahmed's thoughts. I know Silicon Badia was involved in 2 of those deals. It just squeezed in at the end of the month. I was just sort of compiling my notes for one of the editions of FWDstart, and I was like, fantastic, I've all the startup funding for July, and then Synapse Analytics and Cartona just squeezed in there. Would be interesting to get your thoughts on the Egyptian side of things, Ahmed.
Sure. Thanks, Jamie. So maybe a bit of context. The currency devaluation fears last year in Egypt, and then finally the currency devaluation actually happening, I think, was a very big blocker to investments into Egyptian startups. Especially when you consider that most funds around the region are dollar denominated, and then you're kind of investing in Egyptian startups that are EGP denominated. Like, okay, am I just going to lose all of my value from a devaluation here? So we have a very good selection of Egyptian companies in our portfolio, and I'm sure that other VCs will experience this or would have experienced this already. But a lot of our Egyptian startups have been maybe flat on a USD revenue basis, but when you look at their EGP performance, it's going really well. So Egyptian founders have had to fight against the tide here, and I think now that there's a bit more clarity and a bit more stability on the currency kind of side of things, I think you're seeing a lot more investors kind of going in and doing those rounds that they had planned to do. So for us in particular with Synapse Analytics, we'd been speaking to them since, I want to say, last summer. And it just took a while between negotiating the deal. They have several other institutional investors on board, so it's not like a first institutional investor kind of round. So negotiations take a bit longer when that's the case. And Cartona is obviously a follow-on round for us, right? So we had invested in Cartona, it must have been about 3-4 years ago, We continue to believe in them, so jump on the opportunity to kind of increase our stake there.
I want to take this question to Amal as well, because there is an article that says investors from Emirates and Saudi showed renewed appetite for Egypt's startups. Amal, is that right? And why only 31 million were deployed in Saudi in July?
I think it's an interesting, part, but the talks recently is we all know that things have slowed down in the last quarter, right? Everybody was waiting and anticipating in general, not just in Egypt. I think in general, the deployment went down last year. And then, potentially we've seen things actually increasing, towards this quarter where we're seeing more deals being announced, we've seen the surge. There's a theory there, and then we go to Egypt, which is most of the funds last year were actually still fundraising their second funds. Most of them, like I could tell you more than 80% were actually in fundraising mode and have deployed everything. Maybe not everyone was saying it, but that was actually the fact of it. Everyone was still talking, but no one was deploying. They were pushing and trying to wait. First closes started to head towards the last quarter and the beginning of this year, including us as well. We started actually deploying more heavily towards the beginning of the quarter. So I think that's one note that no one talked about, which is everybody started 3 years ago. If you look at the majority of the funds. The second actually component about Egypt, yes, as Ahmad said, the devaluation have made everyone want to wait and want to see what's happening really in Egypt. But Egypt continued to bring, good, amazing companies and great talents, and there's still problems to be solved, over there. But what happened, we started to see an increase of expansions to Saudi. Like I was in the Ministry of Investment, and they said that the number of companies that are actually come from Egypt are actually increasing by the minute. And not just that it was just a thought, there's some founders that have been selling. Now they're relocating some parts of their operations, or they have the biggest chunks of their expenses are actually being spent in Saudi to set operations, hiring, putting the company, and all of these stuff. So that actually encouraged some of the Saudi, and UAE investors to put money in these companies to see an expansion. So everyone wants to see a de-risk factor. Do you have operations? And I remember a lot of founders, do you have operations outside Egypt, right? Especially if it's not a fintech sector or a debt, because those were actually sectors that were, doing slightly better, in Egypt at some point. And there's also a note, anything that is highly operational, that relies on the supply chain, in Egypt was doing well because low costs, they know their trade, they know how to do it really well. If they're able to sell and expand actually outside Saudi, then they'll make the dollars, right? So I think it was about selecting what company and what time and what is the potential for this to go beyond, and outside the region. Going to the last point, which is, why only this amount of companies? It depends how do you decide and how do you define a Saudi company or Saudi deployment. And that's another point, right? When you're actually investing, if I invest in a company in Egypt and they have an expansion in Saudi, is that a Saudi investment or is that an Egyptian investment? So I would question even the data and how, not the accuracy of the data, but how they defined, what is Saudi money and what is it the amount of investors deployed? Is it what they put, or is it what has been deployed really in the country as well? But there is no doubt that the number actually of investments have actually increased in this quarter, in general, due to money and, dry powder coming back, obviously.
Yeah. Issa, what do you think about Egypt's comeback?
Well, I have a lot of thoughts and a lot of opinions here. And I think, Amal, you very well articulated a few of the things I was thinking about. I think we can start off with the whole funding landscape locally within Egypt. I think absolutely right. A lot of funds in the past 12 plus months have been fundraising and struggling. Obviously, the collapse of the currency and the unofficial inflation that we actually saw at 40+% in certain months and cases, really affected the ability for funds to raise. And more importantly, a lot of the regional funds who have been looking at Egypt got their finger burned a few times. For us, for example, we had 4 to 5 deals in Egypt as this was happening. For every dollar you've put, if you're investing in topcos, that's dollar denominated and so on. It's a bit slightly mitigated if you haven't spent that money. And it made more sense as the currency devalued because you have more to spend there if you're spending locally. But every dollar you put technically was worth 30 cents. So unless the companies were doing very well and growing, as Hamid, I think, alluded to, it will be flatline growth. So that was a big problem. But also what we've noticed, because of the lack of funding availability with funds, because they were fundraising, the local ecosystem in Egypt, I don't know what happened over the past period, it's not as strong as it used to be, probably because of the lack of deployment. So usually when things like that happen, you'd expect the local ecosystem, the local funds to step up and do it. And the ones that are there and have money have been doing it. You know, the people who are focusing, like, you know, Hamid and Sunken, Badia focusing on Egypt as a core market. You had Algebra, Disruptech, the list goes on. You know, we've seen them spending some of that money, but it's not enough. Like, you have 100+ million population, very strong local ecosystem that needs a lot more support and a lot more money. Like, if you compare it to Saudi or the UAE, actually, I don't know if someone has that statistic, how many funds there that serve those markets versus what's serving Egypt, it's completely skewed for obvious reasons that we don't need to get to. But that's the biggest challenge. And for us as investors that have been investing in Egypt heavily, is during that period, a lot of companies were struggling. A lot of companies needed support. Why? Fundraising was difficult, operations was difficult, prices were fluctuating on a daily basis, employees demanding higher salaries in local currencies, and so on and so forth. It ended up us and a few others stepping up and saving and supporting and you know, helping, but you know, steer the ship in the right way. So it was a challenging period. So it's good now that people are, you know, putting their money back and investing in Egypt. You know, Egypt goes through that cycle every 5-6 years, right? It's not new. Yeah. If you're investing in Egypt, you should expect it. So that's I would say one aspect of it. But I think the other one that Amal mentioned, the Saudi push or the grow outside Egypt push, you know, that's become a prerequisite for a lot of us right now. You know, okay, you're investing in Egypt, great. We love Egypt. There's passive potential. How do we mitigate that Egyptian risk right now? Because it's so fresh. So that's become something we see a lot more of. And, you know, honestly, out of the few we did in Egypt, or you know, actually the handful that we did in Egypt, the ones who expanded early on actually grew. Even no matter what happened, yes, Egypt flatlined. They were growing a substantial number of users and everything they're developing, flatlined, but the Saudi growth ended up being making 80% of their revenue. So they helped mitigate that, and it continues to be an Egyptian/regional business, and so on and so forth. But what I was also hoping to see over this period, and this is a prediction I do every year, right? Because, you know, as VCs start to be smart sometimes, is seeing a lot more M&A in Egypt. That has yet to come. I hope this continues, building stronger and bigger. Look at Halam, the one who raised the biggest round, right? That was the one, right?
Yeah.
Yeah.
This is a merger. This is a business that's been scaling and is growing aggressively, you know, and it seems to be doing very well, right? And more of that in certain sectors is what I would hope to see to build stronger, more viable businesses in Egypt. But yeah, this is just a bit of reflection on that.
Yeah, Hamid, I want to come back to you because you have some team members in the US investing in US companies and Silicon Badia. When I compare what's happening in the MENA region to what's happening in the US, the story is totally different. It's more exciting in MENA. According to Carta, investment amount increased by only 12% in Q2 of this year compared to Q1 in the US. But in MENA, as we see now, it's a surge. Its investment amount tripled. We deployed more than 355 million in 38 startups in 1 month. So what do you think is happening? What's happening in between those two regions?
So look, Ahmed, if you would allow me to just question that heuristic that we're using, because I think we're just kind of using, you know, July investment figures or whatever, you know, what have you. I think, you know, just kind of looking at the base that we're starting from in MENA, it's much easier to triple that than, you know, say the volume of deals happening in the US. And I think, you know, if we were to be kind of clear-eyed about it, I mean, I love the let's say investment volume heuristic as, you know, kind of an investor sentiment, funding, founders who kind of want to create companies that want to disrupt the region and want to kind of bridge it. So I think that's a great leading indicator. But as Issa alluded to, I would love to see more of us talking about, you know, mergers, IPOs, buyouts. I know that doesn't happen a lot, so like news would be pretty dry if we just focus on that. But also maybe focusing on, you know, cumulative reported revenues of startups that have been invested into over the past couple of years. I would like to see a bit more of that happening. So I think the comparison isn't very valid in my opinion, humbly. And obviously in the US, you have much deeper capital markets. It's way more efficient. Even across the capital structure in the US, you have a lot more debt, you have a lot more mezzanine, you have a lot more venture debt. It's an entirely different beast. We have all, of course, seen a decline in valuation multiples, which again I think is a very good indicator of, is it a buyer's market or a seller's market, with the notable exception of AI and MLOps companies in the US. So that still remains to be the let's say ironclad subsegment within tech over there. But we've seen valuation multiples go down from for an average SaaS company from 10 to 12x down to 6x. So that's pretty severe. So I guess with what's happening right now over there in the US, with the election cycle coming up, I think we'd see a lot more volatility, at least until the end of the year.
This question is for everyone, including you, Jamie. I want some reactions on the breakdown of those investments. Fintech at the top, and then we have Web3. I think 2 companies attracted $85 million. What do you think in general of this breakdown?
To the best of my knowledge, that Web3 is, I think potentially 85 million is one company as well. I know it mentions 2, but I know Sentient Labs, I'm presuming, is the company mentioned there, which is founded by the Polygon network, crypto network founder. What's his name again? Sandeep, who I know is based in Dubai. I found this one weird, the Sentient Labs, because I was struggling to find information about how it's actually based in Dubai. Initially, I thought this was a bit of a red herring. I know Sandeep is based in Dubai, and after a bit of digging, it does seem like it's incorporated in Dubai. It's a free zone company there. But I know I've seen it mentioned as San Francisco based, Singapore based, Dubai based. I know.
So maybe they take a license from every country they want to operate in. That's why they have offices everywhere.
Yeah, exactly. And I think the bulk of the founders, I know Sandeep is based in Dubai, but I think it's a Princeton co-founders as well, I believe. I think it's a professor that's based there. So there's a good geographic spread. So technically Dubai based, but in spirit, maybe not.
I just want to comment on the fintech one. And again, I do think if you look at this data differently, like if you look at it in a cumulative kind of time series, maybe the ranking would look very different, right? From Jan up until now, or maybe from last year. But I think again, coming from fintech, so I spent some time building fintech startups in the past. I really think it's about the distribution channels. So I mean, to me, fintech is really driven by distribution channels from traditional banking and telcos, typically. And you have 2 traditional sectors, quote unquote, that are just flush with cash. Traditionally largest margins. Very profitable companies there. They have a lot of money to deploy, and they have a lot of let's say R&D to explore with startups. So whether it's digital banking, banking as a service, telcos opening up their data troves for micro lenders in a specific segment, it's just an amazing enabling environment for startups to thrive there. So I'm not very surprised at the value of investments being top of the list by some margin in fintech.
I do agree on the financial technology. There has been a very interesting also phenomena in the past 2 years where you see banks are more excited about the financial technology companies. We've seen a lot of banks open their doors. We're actually being approached at the moment, who wants an integration, I said, are you going to invest? They said, no, allow them to do pilots, integrate APIs, and then we possibly invest. And we did actually see a couple of cases, in Saudi where banks have actually deployed, investments in small, companies like seed stage companies with the possibility of obviously an acquisition at a later stage. And that precedents have incentivized others to see like what's in it, what's happening, why these banks are doing it, right? And one of these banks, I'm not going to mention all the names because I don't think the deal is announced, but have their own IT department. They actually, they're a technology hub. They produce, they actually do everything in-house, but they still looked at some of these companies. So I think that is definitely a positive trend for financial technology. But I think the question, the flip side that I see, are we going to see very early acquisitions, and, buyouts that happens at an early stage of a company? And what does that mean for fund managers, right? So I always try to, yes, good news, it will always bring that kind of excitement and we'll see more deals happening. But what would it be? But again, it's the nature of that early cycle. We'll see some of those startups will gain leverage over time, and they will understand how to negotiate and how to deal with all of these stuff. And the second component is the push of some of the governments, obviously, especially in UAE and Saudi, and I think Egypt as well is pushing hard for that, to allow more of the companies to deploy, these financial technologies and to see the possibilities. But then what happens after that is like, how do you really, stop kind of the monopolies that will happen in the market with the early comers? How are you going to regulate between all the players? How many, of buy now, pay later will you allow? How many of X, Y, and Z companies you're going to do? And how would you actually manage those? Again, all pains of growth. I don't see them bad. I'm like looking at stuff and like getting excited about things as they go. On the Web3, I know you actually were talking about the deal, but I don't know what's the second deal, but I know that Animoca actually had an agreement with Neom as well with a possible investment. So I've seen in one of the websites as well a 50 million actually possibility of deployment. Not sure if it's deployed or not. But and Animoca has been actually in the region between UAE and Saudi for, to enable hubs and all of these stuff. But yeah, why the second? I think it's probably driven by one or two deals, and again, that
it's
takes
only
us
two
back.
deals anyway. Yeah.
So
I
it's
want to
just
stay.
the wait.
I want to stay with you, Amal. And only 2 female-led startups raised a total of 270K in July, according to these statistics. 4 male and female co-founded startups managed to secure 20 million, and the remainder of the funding went to male-led startups. Where are all the female founders, or are they there, but VCs dominated by male investors who shy away from investing in female-led startups? What's happening there?
I have a theory here, and I would love to hear from, from Hamad and Issa and all of you as well, which is how many companies actually and how many women leading companies in the pipeline? Like, I've been looking for the accelerator. I didn't see a lot of companies that are led by women in general. So if the pipeline is actually narrow, how do you expect, that there will be a big number, since you're not selecting many anyways, how many of those companies will actually be funded, right? So I think even the intake and the number of women, I would love to have my hands, on data of companies that at the starting point, is there enough actually female-led companies? Because if you see like 100 companies that are male-led, and then you see 10 companies that are female-led, naturally, you're going to have more, on the other side, right? So that's part of it, is just the pipeline, and do we have enough? The second thing, is basically what are the nature of the companies and, the interest of basically the VCs in the sectors that are being started. You'll see that there is a general norm on what type of companies that everybody wants to look at in the region, right? And it's very cyclical, but remains financial technology will remain at the top. Then you might be looking at logistics. Then you might be looking at others, and very again, few women are starting these type of companies. Right. So I've seen, and I looked at few this time. I've seen one financial technology that was started by a woman. And then we've looked at fashion, we've looked at education, we've looked at all of these stuff. Is it the taste of the VCs nowadays? And again, it could be partially the sectors. It could be the deals. It could be, is there follow-on financing? There is also that comes to the mind of the VC. Would anyone follow? Who would follow? So that is one point of it, but I would love to hear from both,
Issa,
of
what do
you
you
as
think?
well.
Hey, listen, I agree. And actually, it's funny. We had this discussion yesterday in a fireside chat here in Amman. And like, I'll be lying if I tell you I have the answer. But the thesis or the theory that you put in place, Amal, yes, the pipeline is not massive when it comes to female entrepreneurs. And then you add selection bias because most VC is men,
Yes.
Potentially, even if they don't mean to, it happens inherently, right? That even decreases it. But also one problem that we've seen, right, on this point is the level of scrutiny that female entrepreneurs within our portfolio and ones that we're looking to invest in by VCs is a lot higher. The questions they ask, I don't know if, we've seen it. The questions that they get asked, the amount of DD that gets done for an identical deal by a male CEO is a bit skewed. Add to that, and something no one talks about, the harassment. We have a company that's been raising a seed round. The female was harassed 3-4 times by angel investors. Really, really like nasty stuff, guys. So we had to step in and talk to these angel investors and tell them, like, this is not acceptable. If this is okay for you, it is not okay with us. If we hear you do it again, we're gonna name and shame or report you to authorities or whatever needs to be done, right? It's not cool. I think that's one aspect of it. I think the other aspect potentially, and again, this is me theorizing, right, is fund managers or funds with partners that are more female. I think that is changing. 5-10 years ago, we didn't have any female fund managers. Look, Amal now is on the call. We have a few funds in Jordan, a bunch of partners across different funds in the UAE and Saudi with female partners. So that makes a big difference. Look, especially in when it comes to that analysis or looking at entrepreneurs and even sourcing. Like at some point when I was at 2454 running the investment department there, within the VC fund there, it was myself and 2 colleagues that were female. And I say this because I think that's why what happened. Half our portfolio were either to be a co-founder that's female or a female-led entrepreneur. Perhaps because also we may be focused on media and may get more female entrepreneurs in that space. I don't know. But we did see that happen, right? But it's a difficult question. It's a problem that exists globally, right? It's not unique to the region.
Of course. It's everywhere.
But maybe
that...
Yeah, but maybe that point you just highlighted, Issa, it also equates to the pipeline, which is the fear of starting. If I hear these stories that you're talking about, right, which actually it's horrendous if this actually is something that happens, right, then it could equate to the fact that there's no encouragement, which poses a role on us really to kind of promote the good stories. And I always tell female-led companies, you have a responsibility to go out there. Like part of what we do as well, it's funny when I look at the portfolio and I said, okay, we need to go out there and find female-led. I sometimes make calls. Have you seen a company actually with a woman? And it's not because I'm being biased towards women, but because I know that sometimes there is this push that needs to happen, at the very beginning, come and then we'll see. And we've seen amazing companies like there's Dalal from Spare, who's leading an amazing, financial company. There's so many that I can actually list here that are leading hard sectors. You have Sarwa as well, and again, financial technology, but we can go on, the list go on. But there is a responsibility of being out there and modeling and showing that they are able to fundraise. And to these stories that Issa is mentioning, I think it is amazing that you stood up for that, because I think they want to know that you're backing. And when it comes to the scrutiny, I think that's part of not understanding the other gender and doubting and questioning everything. Like for me, I don't question a lot of the stuff because I know how women deal with pregnancy. I know that it doesn't matter if I'm having a bad day, I'm going to go to work, I'm going to still do this and that. So I don't question. So it's the not understanding of how the other gender would actually react. And the second point is basically the assumption, the general assumptions about women not being able to do X, Y, and Z. And that's why the narratives need to be out there more often. But a lot of work needs to be put, obviously, there.
Yeah, fully agree. Hamid, quick thoughts on this before we move to the next story?
Yeah, I think non-controversially, but I really think that the entire ecosystem of work, let's call it work-life balance, is stacked against women. I really believe that to my core. Even if you look outside of tech, women entrepreneurs have traditionally in our region, which is again a cultural thing. So it's way upstream. Like it's not a tech thing. I don't think it's a tech thing. tech makes it a bit more exacerbated because risks are amplified. You're taking venture capital, you're dealing with angel investors, whereas you could start like let's say a lower kind of capex or whatever, lower initial investment kind of business in other sectors. But it's still women coming back to the workforce after pregnancy, like all of these infrastructure pieces are still not in place in our region. I speak for Jordan and Egypt, really. So I really think we're really failing in this department.
I think maybe just quickly to add to that, Ahmad, like that gathering that we were at the other day, I was talking to one of our friends there, and she dropped in a very interesting, told me about her experience. So she has a driver, who just recently got married, and she was convincing the driver to get your wife a job rather than stay home. And the dilemma they have, the average salary, and that's above minimum wage for a job that she can get, is around 450 JDs in Jordan. The cost of transportation, because of the lack of proper public transportation in Jordan, for her to get to her job with her husband dropping her off halfway point to her job, was around 350 to 370 JDs. So what is she making? 60, 70 JDs a month. You multiply by approximately 5 for riyals or dirhams. So fundamentally, it's not just tech. It's across the value chain. We have those issues. But that opened my mind. I'm like, okay, crap, this is not something I thought about. I had that problem when I was running a venture builder at some point 9 years ago in Saudi, where we had a sourcing team from one of our platforms of 10 women that could not come to work or show up properly to work because of transportation. Now, it's not no longer the case. Women can drive, and it's a lot more open. But we had to hire a minivan for their disposal. Pick up, drop off, help with kid runs, whatever it is, to solve that problem. But it's an inherent problem we have in our cultures and the infrastructure that we have around that needs to be solved. But going back to tech and VC, there's a lot that needs to be done.
Jamie, did we miss anything about the story? Wrap it up for us, please, and let's move to the next one.
I guess the M&A component that I guess we briefly touched on. I know MT Holland, I know they acquired a Turkish company to help with their expansion there. I know they previously acquired a Pakistan-based outfit as well back in February, I believe. But I think that's all. I think we've covered everything there. Yeah.
Great. Let's move to food tech now.
Yeah, let's move to food tech. This would have been helpful. I was ordering my own meals only yesterday for coming back. So returning to Abu Dhabi, and I'm far too lazy. The prospect of having to cook next week was too much. So a service like this, had I realized before yesterday evening, would have been extraordinarily helpful. So yeah, so it's MealPlanet. They've raised a 6 million seed round, so UAE based, led by MEVP, Al-Touk Group, Sanable 500, Faith Capital, Al Turkey Ventures, as well as some angel investors, Mark Lore and Sami Toucan. So founded only 8 months ago by Khalid Barra. It's a meal plan delivery app. So essentially it kind of aggregates various different meal plan providers in one sort of streamlined app. They currently partner with over 100 different brands. In terms of, I wasn't really necessarily familiar with any of them. So to name a couple, Prep Hero, Pura, Health Road, Nutrition Kitchen, etc. So in terms of what they intend to actually use the funding for, it seems as if it's regional expansion is on the cards. I think they're targeting expansion to Saudi in Q1 of 2025.
Okay, thank you, Jamie. I think if Fintech is the most attractive startups in MENA region for VCs, food tech or food delivery is a very, very close runner-up for that. Look at how many VCs participated in this deal. We're talking about MEVP, Takatkah Groups, Sanable 500, Faith Capital, Turkey Ventures, and other angel investors like Mark Lore and Sami Toucan. A lot of VCs and angels participated in this big seed round, $6 million, and the company is only 8 months old. What's so special about this company or this industry?
I think is it really 8 months? I think when you say 8 months, is it since establishment? I think there's a lot of work pre that, pre the 8 months, obviously, that has been in place. So we invested in this company as well last year. And the founder actually had another company, which is called Icorn, and he had an exit, prior to that, which allowed a lot of connections, prior to this company. So the path have been paved actually prior, to MealPlanet by having the partners, by having the investors, by having, all of what it takes to be in that sector, which is the deep understanding also of the consumer's behavior. There was also a deep understanding of the assembly line and how to make meals and how to distribute and like all the supply chain. So there's the operational actually know-how. There's the founders, obviously, Accenture, management consulting, private equity, and all of that. And then having some foot in the sector obviously helps. And when you tick the box on a founder fit to the market and to the problem, you look at these stuff. The first thing, have you done it before? Do you know anyone who has done it? Have you worked with anyone who actually closely understood that? Knowing F&B as much as it's actually exciting, but it's one of the most difficult to scale as well, due to so many layers actually that are being involved. And we've seen so many rise and fall, obviously in that or stagnant, so that was one component. The second thing, we've been trying to also look and build a thesis around that. So we've looked into so many early stage companies that have done this. Some worked, some didn't work, obviously, but this is increasing. And when you go into meal planning, due to that changes in the consumer, and do we all still cook? Do we all still order? What are the meal of the day that we order all the time? I honestly receive my bag in the morning for the full day, and I run in my office, with that bag. So, but I could be one of not, the majority, but I know that with a younger population, younger couples, younger whatever working places, it will actually increase. So we looked at the sector, the size of the market, and all of these stuff. That was the second point for us. Why such a big round? I think obviously this is within the founder, but I would say, there was a point about the follow-on financing in the future, right? Which is, is there enough money at the A, at the B, who will follow on in the region? Are we going to attract, money from there? So sometimes I would say if there is money at a reasonable valuation, that would not dilute you, will still keep you at a healthy cap table. And I'm not just talking about MealPlanet, I'm talking in general, have that money, but still within the reasonable doubt. We don't want them also to reach a stage where they raise too much, burned it, haven't done much with it. But if you have the experience to manage that cash, so it's good to have this contribution with the possibility of follow-on. So at least that's generally part of, how we looked at the deal, but it was a previous work of building certain theses around food delivery in general and meal planning.
It's been a sector that's been moving, and you understand the logic of why food and food delivery is booming in this part of the world. And you see it more so in the GCC. Population, young demographic, young families, busy, everyone's working, both partners are working 2 jobs. So there is quite a need. And I think I read the statistic recently, I can't remember where, but in Dubai specifically, it's one of the most lucrative markets globally when it comes to these food delivery from an economics perspective and a basket size perspective. It only makes sense that you'll get a few deals here and there that do it. I thought they were all done, right? Joking aside, but I really thought it was. I thought, we had enough food deliveries and whatnot, but I'm sure there's something unique in that. And it's the entrepreneurs that you're investing and betting on. But I don't know about you guys. Every time I open my food delivery app, like these random brands, right, left and center, are popping up every day and closing and opening up and closing. It becomes exhausting. So I stick to the staple few that I use. But, I've always liked the space. We haven't invested in it. My partner Rakan understands it a lot better than I, because he's done a lot of F&B investments, both traditionally and tech. But yeah, I don't have much to add, to be honest with you.
Maybe a couple of thoughts from my end. So I think we have seen a lot of success stories in the sector. So you have seen acquisitions in this sector, and it doesn't matter it doesn't matter where it happened. Like, it just happens, because it's consolidating. And then, obviously the big player in the region, and one of my favorite companies, which Khalid Talhouni and his team invested in, Callo. So Callo is one of the very few companies in MENA that's, if they're not there yet, they're trending towards 100 million in ARR. That's a huge number, right? So I think, I can comfortably speak for other VCs here when I say if your startup makes it to 10 million ARR or revenues that are somewhat recurring with like high gross margins, you've kind of hit you've kind of hit a really good founder kind of a product fit, right? So I think that alone is there. And obviously, you have the X factor of a founder who's had an exit, which Amal mentioned, which I think is huge. Because look, in my humble opinion, when I see a $6 million seed round, I feel, oh my God, like the founder has so much pressure on them now, So, obviously I don't know the details of where the deal was done. What's this founder going to give up from his company? 10%, 15%, 20%? 20% maybe too high. So you're talking about a $40-50 million valuation, at least at a seed round. Again, I don't know the details. I'm just kind of speculating here. So I feel if it weren't a founder who knows what he's doing and has had an exit, I would be nervous for them because they really have to grow into that valuation. What's going to happen next round? Obviously, there's a lot of logistics. There's a lot of supply chain in this sector. So there's going to be future rounds. They're going to be bigger. So how are you going to get from 40 or 30, 40, 50 to 100, 120 in the next year or two? But anyway, that's just kind of my reaction to it.
Yeah, Amal and Hamid, you both mentioned the founder and talked about how the founder had this founder product fit or founder market fit. Sorry, I think the founder had or came from investment background, as you mentioned, Amal, and he found his niche in food and beverage for maybe the last 5 years. It's clear that the founder is very well connected in the VC scene. He's been investing for years as an angel investor and a VC. If there is a founder out there who's not very well connected, how can they start building their network among VCs and angel investors? And also how not to do it, maybe?
Isn't that the most important question, right? That all the founders want to know, and unlock at the end of the day. But I've also, as pre-seed investors, we're also very active into seeing everything. Literally everything. Like I give it the benefit of the doubt. I'm going to get and sit down, even if the sector is not something that we've done before or we know, and sit and listen, from the founders. Now, is every founder savvy and knows how to speak the language? No. Not at all. There are founders that have great products and amazing stories, but you need to extract that, story actually sometimes and really help them convey it to other. And the question, how much will they learn fast, how to do this and who's doing the operations? I always ask also this question, who's doing the operations in the company and who's fundraising? And sometimes it's okay if you are the founder, but you're not the person who is the one who's fundraising, or the face. It's okay. Let it go. You don't have to be the face. Go build a company. Let the other person go and do it, right? And that's also hard, by the way. The founder wants to sometimes be the one fundraising and maybe he's not the right fit. So accepting that as well is another point. So I think it's a two-way thing within the table of investors being able and having the time also to sit and entertain, listening to new ideas, and managing time is a challenge. And I think the second part is founders need to do the homework, as much you will see in all of the narratives. Are founders really doing the homework about what VCs invested in? Did they invest in a competitor? Are they investing in the space? Do they know whatever it is? The simple list of like, do that, you make it easier in order to penetrate and understand if there's an understanding or not, right? So I think the golden one is prepare your homework, at the beginning. Second thing, accessibility. It's not always easy. I hear founders sometimes they say we cold email. It's not always hard, easy. I sometimes send on LinkedIn. Sometimes I get pitch decks on Instagram and Twitter as well. Believe it or not. And I have these meetings. I actually take them. If nice. I was on Instagram that day, I would actually take it. But I think the nature of what we do is more difficult because we invest higher. We invest in almost 20 deals a year or 20 plus deals a year. So we have to look at bigger amount. The question is, does it make sense for everyone to actually look at that? And how do you really present that idea, to the investors? But I want to hear also from Issa and Hamid. There's a long list of 100 items to check on those.
Well, on behalf of all the founders in the MENA region, Amal, I will ask you to write a blog post about this checklist, and we will help you publish it to everyone on LinkedIn.
I'm in, and everybody has a point. I'm sure Issa, Atina, your
Yes.
own like
No,
thoughts.
listen,
We'll
I
write
think
it
a lot of these
Yeah.
points are spot on, but I would say a lot of them are common sense, right? Like, do your homework, research who you're talking about, check what the fund do. Like, I can't tell you how many deals we get that are completely off point. Like, we have a very basic website that tells you exactly what stage we invest in. So if you're a Series A plus company raising 20 million bucks, we're not the right person for you. Like, why would you, you know, it removes or adds a lot of distraction when we're looking at these things. And again, like, you know, if like we have a folder that we put funny decks or that have applied to us in the past, then, you know, have a bit of a laugh about it. But if you're a cement manufacturing company, we're not the right person for you, right? So like, just do your homework. I think that's the basics. And one thing we tell a lot of entrepreneurs is ask your fellow entrepreneurs, people who have gotten money or worked with any of us. Get reference checks, as we do reference checks on a lot of the people we invest in. I think it should be reciprocated because you'll understand how this investor functions. Are they hands-on? Are they value add? Are they a passive investor? Are they a strategic one? Really, like, do your homework. I think that's very important. And, you know, it makes sense when we say it here, but you'd be surprised how much and how often that happens. In terms of the questions that you asked about, like an entrepreneur, entrepreneur and the lack of network to fundraise and whatnot. Again, if you find that right investor to support you may not need more at seed. But if you do, that investor should be able to help you. I can't tell you the amount of deals because we come in early and we find those entrepreneurs that need that helping hand and that support, especially at the early days, because they lack certain skill set as a first-time not fund manager, a first-time entrepreneur. And we extend that, and that's what we pride ourselves to, is getting hands-on and supporting and responsiveness. I think this is very important, Amal, and I'm sure Hamid can relate to that as well. Is my biggest pet peeve is people ignoring my emails. So when people apply to us, we reply. You know, I think since we've launched, it's been like 3.5 years as Access Bridge, we've sourced 4,000 to 4,500 applications for funding. There has been 4,500 emails gone out. There may be a few that slip, right? That's human nature. But that communication is very important on both fronts. So both investors and entrepreneurs.
I totally agree.
Yeah.
We have this founder that we recommended to other 3 VCs. And when I spoke to them and they made the decision, and actually there's a round that will be announced very soon. And I said, what is it that made you, actually, it was easier than what I thought in a strange way. And the company is good, the product is good, founders are good. And he said he is prompt. He answers within 15 minutes. And I heard that from all of them. And he said, he gives me what I asked for. Like exactly what there's no going around. And like, I feel it's obliged to respond to that founder and really give them what they wanted. And I spoke to the founder, I gave him this feedback and he said, I learned it from my previous job. No email and nothing should sit in my inbox from a client for more than 15 minutes. And that's a high discipline. So if I was to actually talk about the discipline as well, we need to discipline ourselves as VCs to respond, whether we like it or not, to try to give feedback, if we like it or not, if it was asked for, right? And the discipline comes from the founder to try to really to be on point to Issa's point, right? On giving us the information so we can react to that as well, because it also helps me. By the way, I do the same homework sometimes. If I want to find which VCs could be the right fit, to recommend, I also need to do my homework because I don't want that VC, next time I recommend the deal, to ignore my messages, right? I want to be on point in the sector, in the stage, in the type of founders. And I started to even create personas for every VC I know. Oh, they like that founder. Oh, that one should go here and that one. So we do that mapping even as a venture capital. We do it for some of the founders.
Because you help your companies, your portfolio companies,
I need
raise
follow
for
on
next rounds. Yeah, exactly. Ahmed.
Yeah, look, maybe I'll skip the parts that I agree with because for duplication. But I think, look, for me, there are 2 major aspects. So we invest in Series A companies, right? So companies that are at least trending towards $1 million in revenue and usually more. So for me, it's 2 questions apart from what Amal and Issa said, which is rings true. It's how are the founders demonstrating their domain expertise? Why? And it's it sounds like a very typical question, like why you? Why not like the dozen others that are doing the same thing, or very similar adjacent things? And really, it's about that. It's about has this founder at least shown a commitment towards this problem space in the past or other problem spaces, and they've succeeded in their design thinking and kind of product building mentality. I think that's a big one for me. But the second big one, which people don't often talk about, is why is venture funding for you? Like, once you accept venture funding, you're on a very different trajectory. You're on almost a very defined path, right? So there's either going to be subsequent funding rounds. If not that, there's going to be an exit happening in the next 5 to 8 years. Like, that's it. Are you sure you want to do that? Are you sure you want to embark on this journey? Because, you can take money from friends and family. There's other, types of investors out there, but venture funding is a very specific type of asset class that also kind of comes with a specific journey that you're going to have to embark on of team building, of product building, of. So I ask all pitching founders, why they think venture funding is right for them and for their companies.
Great. Well,
Okay.
Jamie, take us to the third and last story.
Yeah, if I was to be unkind, like I could say the headline here is sunk cost fallacy. So the PIF, they've invested 750 million into Magic Leap since the beginning of 2023. So strengthening their role as the majority owner there. So this year they've invested 160 million. That follows on from 590 million that they invested last year. This was through convertible debt arrangements. So this has all emerged through Magic Leap's UK filings, which is sort of a treasure trove of information and some eye-catching lines included. So in terms of Magic Leap, I think you might have more info on them. I'm not massively familiar, Ahmed, but I think you're maybe a small bit more familiar. But I know they're in the augmented reality space. They've created eyepieces and headsets, and I know the software is used for like healthcare, retail, multiple different use cases, but they've had a tough time to the best of my knowledge. I think, do you have any more info on them?
I've got a lot of information about them, specifically from here. There's a Wikipedia page about them with all the details up until today, August 2024. So if you need more information about them, please go here. If you're not familiar with Magic Leap, for our audience, you might have seen that iconic whale video from 2016. I want to show the video first and then ask a few questions.
Oh, I do remember this.
So according to that same article on Wikipedia, the company started back in 2010 to create augmented reality overlays, like what we saw in the video. By 2016, after releasing the whole video, the company was valued at $4.5 billion without having any product yet. By 2018, they launched their first device, the Magic Leap 1, and it was sold in the US. In 2020, the information reported that the company was valued at $6.4 billion. And by June 2020, that amount dropped to, that valuation dropped to, guess what? 450 million. That was a 93% decline in the valuation in 6 months. And in October of the next year, 2021, VentureBeat reported that the company was valued at $2 billion after raising a new funding round of 500 million. In 2022, the company Magic Leap officially released its second AR headset, Magic Leap 2. And in July this year, last month, they laid off 75 employees, including all of the sales and marketing team. Up until today, Magic Leap had raised a total of $3.5 billion of investment, including 750 million from Saudi Arabia's Public Investment Fund, or PIF. The company noted that it needs more investment in the coming 2 years. So my question is, what a roller coaster for that company. I love that the determination of those investors, because they changed the CEO already. So I think the investors are taking over managing this company. They still heavily investing. Why? Why not just cut their losses short and call it a day? Is there something I'm not seeing in this company?
Who knows, right? I'm sure there's something happening behind the scenes. But I like this space, right? This whole augmented reality, virtual reality, like you see Apple, Meta, and all of these guys getting to the space. And we've invested in a few that use these devices in certain use cases, especially in the education. I'm talking universities onwards, as well as medical space. And the use cases are astonishing, right? So I like this space. I hope more people like this succeed. But your answer to your question is, I'm just as baffled as you are. Unless someone has some insider information, I think everyone will be on the same page.
No, I definitely don't have insider information, but I would venture to guess that in these types of companies, you're relying on either massive enterprise B2B or B2G types of contracts. And I would be
actually,
surprised.
you're right. They're focusing on B2B now.
Okay. Yeah.
Yeah.
So, obviously the sales cycles there and the deployment cycles and all that are just agonizingly long, right? So, we deal with regular B2B SaaS and we're like, going crazy sometimes at the length of these sales cycles. So, to give them the benefit of the doubt, maybe there are incredibly large contracts that are in proof of concept or at some late stage of the pipeline that just require additional development work. But that's me being extremely kind, by the way. So on the flip side of that, on the flip side of that, a lot of these companies that have kind of gotten into the space back in 2016, 2017, they just did not have low code, no code, and AI agents like we have today. So maybe kind of circling back to the first topic of kind of MENA fundraising, a lot of these companies are going to be much cheaper to build. Like,
Sure.
whatever used to cost you, it's going to cost you 10x less maybe to kind of build these platforms. So, I think it's an uphill battle in my opinion.
To your point, Don.
I agree. I see the potential of this company. I mean, they're competing now with, of course, Meta, with Apple on the VR, AR headsets, and there are other companies, and it's a growing industry.
And to
of course.
to that point as well, Ahmed, I believe they actually partnered with Google in May.
Yes.
And I know that Alphabet are an investor, or they were, as far as I'm aware, that obviously Google's parent company. So, so that's that maybe sheds a small bit more light,
But there is also one more thing that happens also with such companies, besides the point that Ahmad has made, which is it's a very valid point that the cost of starting these businesses was very expensive. So it justifies the high spend of the funding round at the beginning, right? Now, as market adjusts and as technology becomes more mainstream, there's definitely going to be a hit on the valuation, right? So it's a price that most companies that start before its time have to pay, unfortunately, as they progress in the market. So that's one very big point that could actually influence the price. And the second point is, besides the partnerships and the B2B cycle, there's a lot of proprietary and patents and IPs within such companies that happens almost in every application, right? And I would expect that there is so many applications that can be done beyond education and beyond, your norm. It could be so many stuff that could happen, which could monetize over the long term, not necessarily today. And again, as we're all speculating over here and making these assumptions, I'm actually going to pursue that story and know more about it. Unfortunately, I didn't have enough time. I could get more insights, but hopefully we'll get more. But that point is quite valid, on the timing and basically what are the possible, IPs that are creating, where are they being put? Because if you decide that this is going to be placed in that sector, the potential could possibly, change the whole trajectory of the company. But yeah, it's I see that this is kind of intriguing you, Ahmed and Jamie, a lot.
It's very intriguing. Well, thank you so much, everyone. Before we end, there is a question that's been etching me since we started this episode. Ahmed, tell us about the pictures behind you, please.
Okay. I'm a big Wes Anderson fan, the film director. And these are alternative film posters created by a Thai artist. So I got them as a wedding gift from one of my good friends, whom Issa knows really well. So that's the story.
Oh, fantastic. Yeah, I can see fantastic Mr. Fox, that the Royal Tenenbaums as well. I think I can see over his shoulder. Yeah, very good.
Yeah. the Darjeeling Limited here. So yeah,
That's terrific.
yeah.
Fantastic. Well, thank you so much, Amal, Issa, and Ahmad. This
Thank you.
was a really insightful and heated episode.
Yeah.
Thank you so much. I hope we see you again in an upcoming one.
That was brilliant.
Thank
Thank you so
you.
much, guys.
Good to see you.
Great
Good
day
day.
ahead.